This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 17th, 2015. Euro dollar. So the market remains under pressure this week and is now fast approaching critical support in the form of that low that we saw back on the 27th of May at 108.19. A break below 108.19 will then expose the retest of the 2015 and multi-year low at 104.62 from back in March. At this point, a break back above the high that we saw going back to the 10th of July at 112.16 would be required to take the immediate pressure off the downside. Sterling dollar. So cable is looking more and more constructive, with the market putting in what appears to be a potential higher low at 53.50 in favor of the next upside extension back towards and eventually above the recent highs, the 2015 high at 159.30. At this point, only a break back below the recent low at 153.50 would compromise the recovery outlook and put the pressure back on the downside. Dollar yen. So dollar yen has mounted an impressive recovery over the past several days, with the market potentially now putting in a higher low at 121.30 in favor of a resumption of gains back towards and eventually above that recent multi-year high that was set back on the 5th of June at 125.85. However, we are coming into some stiff resistance right now internally up towards the 124.50 area, and the market will need to overcome this level to continue with this upside. Euro Swiss. So Euro Swiss has been mostly locked in a consolidation over the past several weeks, though the market looks like it could be in the process of a recovery, with a higher low now at 102.35 and upside favored back above 105.75 and towards that February peak at 108.15 further up. At this point, only back below 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has been under pressure over the past several weeks, with a medium-term downtrend picking up steam and the market breaking down to yet another fresh multi-year low this week, down around the 73.50 area. Deeper setbacks are favored over the medium term or over the coming weeks down towards next key psychological barriers at 70, although the market could be poised for a bit of a bounce over the coming sessions, given how extended the technical studies are on a short-term basis. Ultimately, though, look for any rallies to be very well capped ahead of 78. Dollar CAD. So dollar CAD has broken out to fresh multi-year highs this week after taking out the previous 2015 peak at 128.35. This puts the focus now on a retest of the 2009 peak further up, which comes in at 130.65. At this point, any setbacks now should be very well supported ahead of the 126 area. Kiwi dollar. So Kiwi has extended declines to its fresh multi-year lows, with the market finally testing critical psychological barriers at 65. But given the extended technical studies and the oversold nature of the market, there is risk now for a short-term corrective bounce before the market looks to extend declines further. However, any rallies in this market should be very well capped ahead of 68. SPX 500. The S&P 500 has mounted a very significant recovery over the past several sessions, with the market, after looking like it was poised for a breakdown below the March low, recovering now back towards the record high from May at 21.37. Still, the market could be putting in a topping formation and will need to take out that 21.37 high to negate the topping outlook and open the door for fresh upside and fresh record highs. Inability to take out 21.37 will open the door for renewed downside, with the market potentially eventually breaking back below that critical March low at 20.40 and confirming a top. Gold. So gold remains under pressure, with the market now taking out the previous 2015 low, trading down towards 11.40 and just shy of that critical 2014 multi-year base at 11.31. A break below 11.31 would open the door for deeper setbacks towards critical psychological barriers at 1,000 further down. At this point, we would need to see a break back above the high from the 6th of July at 11.75 to take the immediate pressure off the downside.